I mean, you just got I guess, move away from reflecting on the glory that is Newcomer. You got some data on the venture market today. How would you describe where we are today?
Yeah, I mean, we're really seeing a consolidation around, I would say, the mega funds, the Lightspeed A16Z index, being able to still raise, even though they're sometimes cutting their targets back, but other times meeting them, but raising these multi-billion-dollar funds. And then for everyone else, it's kind of a different world. And the same goes in the startup world, right? Like you see Anthropic, Ilya's Safe Superintelligence raise $1 billion round, and then you see startups shutting down or quietly, merging if they can possibly find an exit at all. So it's really what I think is the most fascinating point that we found in the data last week was the number of unique venture investors in US startups has fallen just really dramatically since the boom times. Obviously, there were a ton of these tourist investors that came in. People, got excited, thought they could start their own fund, did start their fund, but then, have failed to raise a fund too. And we've seen this consolidation of funding to really just come from the big firms, and then kind of everyone else is sort of left out in the lurch unless you have a super specific value add, or you can really market yourself as doing something different, but the bar for that is just getting higher and higher. Like a lot of these merchant funds
we put the chart in our Friday newsletter. We'll probably include it with this podcast post, but it is quite dramatic to watch the fall off, and a little sad.
Yeah.
I mean, I liked all the new managers, and there's always some of the best funds are early funds of new promising VCs, but the downturn has sort of enabled this pivot to, I don't know, venture capital becoming a lot more like private equity and big firms ruling the day. And so, it's been good news for Andreessen Horowitz and Lightspeed and a few others, and not good for the anonymous manager who isn't going to raise their second or third fund.
Yeah, I mean, obviously, we did get to touch on some positives, a couple notable exceptions. Accrue Capital announced that they closed $700 million in new funding last week, and then also last week, a friend of the pod, Harry Stebbings, closed, his third fund at $400 million to invest in early stage startups in, everywhere, but also especially in Europe since he's based there. Really exciting. Got to catch up with him about that. And he's, also he's leaning into his podcaster angle and his media company as a sell to LPs about access around deals that he has, which is
we are not doing that right now.
We are not doing that.
I have no judgment anymore. I feel like I used to. There was a day where I would have been such a purist, but we are very focused on the media business events. I shared on LinkedIn that I'd done I've done 3 investments. Substack, which obviously I talked about in the newsletter, was effectively marketing for Substack. I invested in Volley, who I co-host Cerebral Valley with. So they're like a partner, and then the only like true investment was in Protege, my friend Bobby Samuels. But it was like, that was just sort of like the friend who, if they ever started a company, I wanted to
your friend that if whatever you'll do, I'll back you. I got you.
Yeah,
friend.
exactly. Yeah. I feel like that. Anyway, I just want to be transparent. But it's just inevitable. I feel like the savvy person, you hear, Harry Stebbings is doing this big fund. That's not sort of on our minds at the moment.
Stay tuned or not for that. But
you're like Eric Swims. No,
we'll see.
Why do you think he was able to raise now? I mean, honestly, it doesn't feel like it doesn't feel like this season, I guess, for new funds anyway. I mean, this is his third fund going to 400 million, but what was your take on why Harry has sort of succeeded where others have failed?
Truly, I think, the biggest thing without a doubt is I'm sure the podcast is just an incredible asset for, meeting talent, meeting founders, meeting investors. And just, as you meet people, you get clued into the network, and you get kind of an advantage on what deals you should be tracking if you're, talking to these people all the time and building these networks. But then he's now at this point raised a third fund. The biggest cliff, I feel like, for emerging managers is going from fund 1 to fund 2. So if you can pass that, that's certainly a positive signal. And also in his first fund, he's got these
Then it's just
incredible
capital
deals.
forever. Then you just get
Then,
no.
yeah, yeah,
Then you're
exactly.
too big to
Then you're
fail,
set.
and your
Yeah.
LPs are like, oh, not this fund.
The next one.
It's the classic. Like we pulled out and we didn't hit Excel's fund where they had Facebook, so we can never pull out again, and we'll just
and
stick with.
then you become General Catalyst and you buy a hospital. So yeah,
Yeah.
that's the journey. But he no, I think he really has some track record. He's invested in some promising companies, including 11x, the AI startup. Really bullish on having an advantage in the European market, and especially at the early stage there. There's a lot of good AI talent coming out of there, which he's clued into. So I think that focus, having a media product as a selling point to differentiate yourself is really important. And now he's also starting this Scout fund additionally from the 400 million main fund, where investors are all VPs or chief officers of some kind in other startups that can pull their network, and they get to keep all of the carry on their investments. He can just use it as an incredible funnel. If the scouts make a deal that you like, you can follow on and invest in a bigger check. So it's pretty savvy for deal flow too, finding deals.
He's certainly thinking about venture differently than a lot of people, which
Mhm.
is appealing.